Mm.
So today lesson will go through LO4, which is learning outcome 4. And as you know me, my name is Anjum Satha. Please, if you have any question, drop me Anjum at UK. And today lesson key focus will be learning outcome 4. And the next lesson will go through assignment discussion. But the question you have, will go through end of the lesson. And the next lesson will be key focus on our overall assignment. So today's lesson, we go through understand the importance of monitoring cash flow. So there are number of things which we need to be kept in mind to include the cash flow, which our discussion will be focused on the cash flow. So today lesson indicative content, what we're supposed to, we'll discuss about the monitoring cash inflow and cash outflow. We look around the difference between the cash and the profit. We look around the component of the cash flow statement. We look around the cash flow forecasting, monitoring costs, and others. We look around the impact of the management and the cash flow, and we'll discuss about planning, monitoring, and all, these are the functions. Budget or the management, really, in the management accounting, we need to look around these. Okay. So cash is the lifeblood for any business. So if we look the various businesses, they not sustain in a. So we have a company called BHS, which is a British home store, one of the leading company does not sustain in a business due to the cash flow. Due to the cash flow, we have to manage the cash flow. So difference between cash and revenue, which is mean sales, or we call them turnover. So what do you think? Is there any difference between sale and cash? What do you think?
Huh?
Sales and the cash. Is there any difference between sales and the cash?
You make cash from the sales.
Yes, we can make the cash from the sales, but we can do the credit sales. So the sales not always mean the cash itself. Yes, we have to discuss them the cash and more focus on the cash sales. Yes, that's why we need to be really look around. So in business world, sales, revenue, profit even not mean cash. So we have to look around the profit we have, it's convert into the cash. We have more cash. So because sometimes we do the credit sales, we minus our expenses, and we can say we have a profit, but we not earn the cash yet. We not receive the money from the customer. But we had a sales, is a credit sales. So buy now, DFS sofa, DFS, buy now, and pay in 5 years. Yeah. So we are not getting the cash in 5 years, but we record the sales we have. Yes. So that's really we need to be look around. So we have to focus on these points. And today lesson we look around the cash. So cash is the lifeblood for any business. Without it, we can't sustain it, and we have to look around the forecast the cost. Or we need to be look around. We cash budget. So it's very crucial cash budget inflow and outflow of the cash from the business. So we have to look around the receivable days. We receive money in 30 days from our customer, so we can give them less days credit, and trade payable, which is mean our suppliers to whom we supply will pay them in 90 days. So there will be a 60 days safety. Yes, so we have always cash in our account. So we have to look around the receivable days and payable days, and we have to look around the payable days is 90 days and receivable days 30 days. So safety net is So we have to be focused on credit control. Credit control. We're not giving the credit to those people. They can't afford it to pay it back. And we have to look around the credit control. Any question? We all okay? Okay, so in business, cash flow is the statement of the cash flow we can find under the financial accounting. We can look around the short-term obligation. Within certain days, we have to make the payments. We look, and they receive. So it's quite crucial. We look inflow and outflow the cash. So normally the cash flow statement in financial accounting we prepare under IS 7, and the cash flow have inflows and outflows, and we look the major three types of activity where cash in and out from the business. That's really we need to be look around. Okay, so inflow and outflow. Two method we use, direct and indirect method. So we can look around operating activity like the Tesco. Their normal business is about selling consumer goods. That's
Yeah.
how much money in and out under operating activities we can see. And then we have an investing activity. Maybe they have a spare cash, they can invest into the various other company shares in the property plant. So that will be investment, and we can see how much money in and out from the investing activity. Okay, sometimes cash flow can increase if we borrow more money, like bank loan. So cash position can be better, but the liability can increase. So we can look around the financing activities, how much money in and out, the cash under the. So the statement of the cash flow, we can start from profit and loss before tax. We can make adjustment how much money in and out from the business, like finance cost, which is mean interest. Depreciation is a non-cash expense, which we adding it back. We make adjustment, increase inventory or decrease inventory, this impact on the cash flow. Maybe you have too much inventory, you have too many receivable. If receivable decreasing, your cash position is increasing. If your trade payable is increasing, so it means the cash position is better because you're not paying it, you're creating more liabilities. So we can look around the cash position under the operating activities. Then we can look around the cash under the investing activity, property, plant, equipment, how many we bought, how many we sold, the difference, how much the cash we generating under the investing activity. Then we can look around the financing activity. Maybe we issue more shares to the and we raise money. We can increase the cash by getting the loan from the bank. We paid the dividend if we have the shares, people bought it, and we paid the dividend in the shape of the shares. That also affect the cash. So we can see what is the net cash position from investing, financing, and operating. Then we opening balance at the start of the year, how much was. So we can see how much is the net cash balance we have in the year. So we can find the companies of your choice like Morrison, Tesco, Asda. We can look around their cash flow, and we've been given the question in our workbook, which will solve it. Mean we can do the question, and that's will address our LO4. So cash can be generated from operating. We can look around interest and tax payment that can make impact on the cash. Investing activities, property, plant, equipment, we buy, not buy, we lease it, so the cash position can be better. We can increase and decrease the cash through financing activity, settling those liabilities, and the cash and cash equivalent, we can find how much balance we have. Okay, so advantages and the liquidity. Cash can alert the user liquidity problem. If we don't have a cash, it can be create the liquid problem because the asset or cash itself is a liquid, which we can convert it. Like if you have a gold, it is easy to sell compare if we have a cloth. So gold is mean cash itself.
Yeah.
So limitation the cash balance is sometimes the people can manipulate by increasing or decreasing the payment period. So that is sometimes not reflecting the true performance of the business as the cash increase or decrease period and the payment overdraft. So these all increase and impact, the cash flow. That's which we need to be look around. Okay, then we have a budget. Budget is the financial plan. Budget is the quantitative measures. Budget can be measured in terms of financial plan and where you are, where you want to see yourself in the future. We can plan, how much cash we needed. If you have too much cash in your account and you're not investing, you're missing the opportunities as well. So we need to be make sure because the cash is multiplying. The control, we need a good control on the cash. So you can say minimum we need 5,000 balance. Let's say, or if we have a 10,000, so rest you can invest it. So we have to look around how many months are for, which we have a safety net in place. So that is quite crucial, which we have to look around the communication or the budget. Budget is provide a set nav. It's help, to communicate. Coordination between the departments is also quite good to be. We make the budget for the cash as well, and we can evaluate and we can say to sale people, promote the more cash sale instead of the credit sale. So that will help, to improve the cash. Okay. Budget also help, to motivate people, their motivation level, because they're expecting the cash. They can look around and the authorization of the budget. So we can say the managers, so we have a good control in place. We're not giving the lot of cash. We can ask, what you want to do with the cash, what your role and responsibility. So we can look around accordingly. That is quite crucial, which we have to meet the requirement. Otherwise, we're not going to achieve the desired objective. That we need to look around. Okay, so please, if you any question until now?
No.
Okay, so we can look around these. I included few slides for you. Any budget you make, first thing is the sale forecast, and then we can make all budget. Cash budget is the most important budget.
Yes.
And end of the day, cash, we said earlier, is the lifeblood for any business. Whichever the budget technique, fixed budget is mean the fixed cost, it stay the same. Flex budget, which is mean change, according to the, if you have more employees, you have to pay the salary, you need more cash, so you have to be look around the budget accordingly. Otherwise, these all is impact, so we have to look around the impact of these, and we have to prepare budget accordingly. Okay. Always in a budget, we look around the fixed cost, variable cost, or the cost behavior, which we had a lesson. In lesson 1, we discussed about the cost and the cost behavior and the budget. I included some here for reading, and you can look around different companies' budget. Yes, Zurich Insurance, what their budget, and we can copy these links. It's good to look around. And you can watch, on the video which I included. It's called Budget and Budgetary Control. Okay, so today we'll look around one of the budget. We've been given activity. Let's say you can, as you've been given in the workbook, so we can look around. We have here, we have a July, August, September, October, November. We've been given the sales, how much we have, how much is the purchase during these months, how many wages we expect, salary normally is a fixed, and how much is the sundry expense or miscellaneous expense, we can say. How much balance was at the start of the October, and 50% debtors, which is mean our customer, they pay in the month of the sale, and and 50% they pay end of the 2 months. So the following month they pay. So 50%, whatever the sale we have, 50% is a cash, 50% we receive the money after 2 months. After not this month, in the next month. So 50% purchase we do from one supplier. Yes. And if we'll make the payment in the same month, we'll get the 10% discount. So 25,000 is our purchase. It half of 25,000 is the 12 and a half. 10% will get discount, which is mean 90% we have to pay instead of 12 and a half. The remaining 50%, which is 12 and a half, will pay in the following month. So we can look around the impact. So new compute equipment, we are buying it, and we'll make the payment of 35,000, and we've been asking, the wages is arrears. So we can divide by 4. Yes, 1 week. So we times by 3. So 3 week wages will pay in that month. The remaining 1 week will be arrears, which mean we pay in the next month. So that's we can look around. So in August and October we have 5 weeks. So 1 week will be arrears, 4 weeks will pay. So we can prepare the budget ending 31st, 3 month budget. So we can say October, November, and December cash budget we are going to prepare. And I can send you a separate template as well, which is, but you've been given the template exactly quite similar in your workbook as well. So we can look around first. We have a October opening balance, which is a 15,000 given in the question. We can look around now. If I'll take you further, we can make the section of receipt and the payment in these months. Yeah. And we'll prepare in 3 months budget. So first thing we can look around what is the sale was. Sale was in July, August, September, October, November. We can write state there, and 50% we receive money in the month we sell. 50% will go in the Parliament. So July sales 52,000. 26 we receive in July. 26 we receive in August sales 25 to 50% in August. 50% in September, and so on. Yes, and then we can add it October balance, November balance, and December balance. How much receipt we expecting in the month? Yes, because we are making budget of 3 months. So we are expecting to receive 46,547 through our sales, the later dates. In terms of the payments, we can look around July, how much payment we supposed to. We purchased 25,000. 50% we paid in the month we purchased, but we'll get 10% discount. So 12,500 times by 90%, which is mean 0.9. So your answer will come 11,250. You got me?
Yeah.
As whatever the condition or whatever the plan you make. So the remaining 12.5 will pay in August. So we'll carry on doing exactly the same. We'll add it October, November, and December because we're making 3 last month budget. So how much payment will go in terms of the purchase? 28,400 and so on. So that's which we can look around, and that's we have the payment which we can look around in the month. Okay, so if I'll take you back to in our calculations, yes, then we can say now. So how much is 15,000 is the opening balance, 46,500 is our receipt, total receipt 61,500. How much we make the payment towards purchases? 28,400. How much was the wages? So we can say wages we supposed to pay 4,100 divided by 4 times by 3. 3 months will make in that month. 1 month will be making arrears. So that's why we'll include, in our wages only 3 months. Yes. So we can look around 3 weeks. 1 week's the wages with the previously arrears month. So we'll make, so total payment towards wages 4265 and so on. So 1 week of the previous month and 3 weeks, that month. So we can add them all. Salary is a fix. We'll carry on paying 6,000 as given in the question. Sundry expense as given in the question, and equipment as given in the question. So we can add it. How much is our payment? 61 minus 4175. So we can find it. How much is the balance closing we have? So closing balance this month, it goes next month opening balance. Yes. So that's, and receipt and now total money available, the payment and how much. So we have these months we have a negative balance. So we don't have our own cash. So we have to make arrangement with the bank, or we pursued the customer to receive the money quicker, or we'll change the plan because otherwise we are out of the cash. Any question there?
Mm.
Okay, so this way we can make the budget. And of course, budget help, to communicate, budget help, to forecast. We had a discussion, different types of budget. We can rolling budget. We discuss in lesson 1. Yes, control, zero-based budget, you start from the zero. 8 types of the budget to improve the cash. has its advantages and disadvantages, which we can look at. I included few slides to enhance your understanding, and we can do the quiz on the budget as well, and all the resources available. So now we have the book, yes, the booklet is available. So let's, we look quick, in terms of the booklet. Hope you done the questions. And if not, so you can solve the book, which I'll go through in a minute. And we'll look this first, and then I'll stop the recording and we can go through without recording as well. So if we look here, we looking LO4. So go back to further down LO4, which is, you will see here LO4 we have, which is 4.2, 4.1 is all about the difference between the cash and the profit, which we mentioned earlier. And a business start, with the share capital, it means the
Is this the workbook?
Yes, this is the workbook.
Okay, I'll show you what I need help with.
Okay, no problem, which I'll go through in a minute. And we can look around, and then we have a sales exactly the same. We said month 1, 1, 2.
I done that one.
Okay, so that's which we can fill it these, yes. So we can look around how much.
That one as well.
So that's okay. So what you need to do, if we look here, read first information. The business start with the share capital 80,000. Yes. The first month the secure the bank loan is 50,000. So they have 130,000. Yes. Then the first 6 months, the trading, the cash sales we have 15,000, 20,000, 22, 24, 28, and 26. In the trade debtors who pay the business a month after the purchase, the goods. Yes, it's also debtors who pay the business a month after the purchase the goods. That the trade debts are 1 month is 0, first month no money. The second month we have 7,000 to pay. The third month we have to pay 6,000. 4 months we have to pay. The 6th month we have to pay, and the month we have to pay 9,000. Yeah, that's we can. And then we look around the here you've been given the suppliers. Yes, the cash outflow, they already gave you here the cash outflow, how much is the outflow towards suppliers. So we have the month 1, 40,000. Month 2, month 3, all we have. The equipment we bought 80,000. The salary we are paying fixed, which is yes every month. The rent we pay the fixed. Interest we pay the fixed. Utility bill is varies in the months we have, the month we paid. Yes, the loan payment we have. So what you need to do, please, you have to state those figures in here. Okay, so you write the month loan 1. Yes, you write the capital. Yes, opening capital, which you have 80,000. Bank loan 50,000. The sales we have, the debtors we have. Yes, debtors mean to sold it, and they will pay you in the following month. Yes, and then you have a suppliers. You write the suppliers, how much payment how much equipment we making, rent and rates and all. And then you add the figures here. These are inflows, and then you minus outflow. You got me?
Yeah.
Okay, that's we need to fill each month. Yes. And when you do, if you have the balance here, the closing balance, next month you can put it opening balance. Yes. And that's carry on. Okay. So that's the way we can, and we can set it, the template. I can do first month with you.
No, I already done that. That's not what I need help with.
You already done it. Brilliant. Well done. That's the way we, okay, those guys listening this, please, you have to do this. And
I've
then
already done that.
and you have to explain and comments. And then, of course,
You know where it says analyze the possible reasons for the results?
which one?
Go up.
Here.
No, not here. It's the question is analyze the possible reasons for the results.
analyze the importance of the business, or you're looking the reasons? Is it? Which
No, it's not that.
which LO we looking?
It says, keep going.
Okay, I'll stop recording and then we'll can. Guys, those who have any question, you can drop me email anjum@ukversity.co.uk and I'll get back to you as soon as possible. Thanks for attending.